Hi guys, it's me, Randy, and Venkat on the other side. As usual, we're going to share with you some great tips and tricks uh, on saving money and investing money. So we're going to dive into this real quick. It's about real estate, our hottest and our favorite topic, real estate. We're going to talk about benefits of real estate. Simple, clear as mud, simple five pointer. We're going to share with you today, and because like I said, this is our favorite, hottest, and easy to understand too, and actually make you real big bucks at the end of the day, after some time. And this is a great way to invest and save money. So Venkat, we're going to start off this five pointers. You want to get a head start?
Yeah, definitely. Yeah, I just wanted to give you a little bit about the real estate. It's one of the top 80% of the millionaires or rich people. They become rich because of real estate. So you just follow their path. Basically, if you want to become rich or millionaire, just invest in real estate. Whatever it worked. It worked for hundreds of years. So it will work for next 100 more years for you guys. So, but if you want to know what are the benefits, just that's what we are going to talk about today. And the benefits is basically the first one is cash flow. Cash flow is not the only benefit, but most people what they do is just they always look for the cash flow. If the cash flow is not there, it's that means it's not a good deal. Like they always think like that. But there are several other benefits we are going to talk about today. But the first one we want to put that is a cash flow. Cash flow, if you think about cash flow, like you after all the expenses, it's a rental property, right? Let's say you're renting it to other people, and then for $2,000, and your mortgage and everything included, HOA, maybe PMI, insurance, and all those things included is 1,500. So $500 is your cash flow.
Yep.
That is your cash flow. Every month you're going to get $500. So $6,000 a year your cash flow. Let's say you put $60,000 on a $300,000 house, right? $300,000 house. You put 20% down payment. That's $60,000. So you're getting $6,000 cash flow. That's 10% cash on cash return. That's one of the major benefits. That's
When we
cash
talk
flow,
about
right?
cash flow, so basically we're talking about the net cash flow, like the net benefit out of the investment, right?
Exactly. That's like 10%, right? Think about like S&P 500. It gives around 7% average, 7-8%. So this is more than that. Just one benefit of real estate. So we're going to cover several more here. So you want to go
Oh
to the
no, go ahead, Venkat. I'll chip in whenever it's
Yeah,
needed.
yeah, sure. So the next one is, guys, like think about you are renting the property, right? You're renting the property. Who's paying your mortgage? The rent, the tenants are paying the mortgage. The mortgage includes the principal, interest, tax, insurance. Those four things, right? They are paying it, right? The $1,500 we talked about every month, you are not even paying a penny out of that, right? Unless if the house is vacant and nobody rented it, right? So your only job is to rent it out. And your first job is to find the rental property and close the deal. After you close the deal, your only job is to rent it out and
Yeah.
maintain it, right? That's the only thing. And as long as you do that, your principal will be paying down. Like you don't have to pay anything, right? You just come in the front, and then the tenants will take over all your payments, and you just pocket the rest, the cash flow, and the principal is paying down. Think about like for 30 years, if you rented it out, like basically like by around 10 year or around 10-15 years, if you take the entire rent amount and pay it as into your mortgage, right, the lenders, you would have paid off with like 15 years because of the cash flow, extra cash you're paying, right? Just off the amount of time. That's a great thing to like. You're just somebody else paying your mortgage, basically. That's it.
Venkat, just a question, kind of indirectly related
Yeah,
to what you just covered. I know that we have covered this question before, but if someone is watching this for the first time, I want for their benefit, I want to shoot
sure.
this
Yeah.
question to you. What would be the ideal cash flow? When I say cash flow, again, I'm talking about the net cash flow. Does it depend on the area you live in and the kind of property that you rent out, like a duplex or a single family or a townhome or whatever? What would be
Yeah.
the general like ballpark figure for the net cash?
It depends on the the area, like you said. There's so many variables in this equation, right? but I would say like I wouldn't go anything below $200 a month cash flow. But my rule of thumb is like this: condos, $200 a month at least. Condos like 100,000, 150,000 condos, or anything like less than 150,000. I would say $200 cash flow. I think 150 to 250 is like $400 cash flow, and 250 to 350, 500 to $600 cash flow.
Yep.
And most of the people, they don't, like, we are talking about people that within that limit. And if you're going above it, like, you may buy the commercial units, and it'll varies. It's like you may get more from area to area, and how you're buying low, very low, and a lot of things involved there, right?
Thank you.
So the next one is I want to talk about appreciation. Like, think about every year the real estate get appreciated 5%.
Mhm.
This is average, right? Some places it's even 7-8%, right? Per every year, average is around 5%. So if you, after 10 years, your tenants keep on paying, right? So after 10 years, a $300,000 house would be $450,000 house. It'll be 450. So after 10 years, if you pay, or if you just sell the house off, you probably double your money. Like, not double, actually 5 times your money. Like $60,000 you put, you'd end up having $300,000 in 10 years.
Yeah.
We can have a different video. We can show you the calculation on that. That is another big benefit on that appreciation. It appreciates, it appreciates, tenants paying the principals, and you have a cash flow, and then you also put some 20% on it. So everything included, you're going to get uh, $300,000. That 5 times more than 60,000, right? You put, so you end up having that after selling and paying off all this debt and everything. You'll still have $300,000.
So just to be clear, one point that you briefly touched on under this, the number three, appreciation, is if you haven't, let's imagine if you haven't made the 20% down at the time of the purchase, after a couple of years or whatever, you know that the value appreciated, right? And you can
Mhm.
actually use that, how do you call, the equity, to make sure
But
that,
most of the rental property, unless you bought it as a primary home and then rented it after 1 year, like, there's another way that you can do it. We'll talk about it in another the next point.
okay.
So it's just if you are buying as a rental property, you have to pay at least, the lenders
Oh
will ask
yes,
you
you're right. If you're
20
buying as a
20% or
rental property,
25% on
investment
it.
property, you anyway have no option but to go for 20%. But thank you for that point, Venkat. What I was going to say is like exactly you said. If you purchase it as a primary property, but later on you moved out this it, just like in my case, and then you want to rent it out as basically it becomes an investment property effectively. Then if the value appreciated, you can use that equity to make sure that you refinance and bring down the PMI by making sure that the appreciated value is taken into consideration for the 20% down. It's a whole separate episode. Just
Yeah.
want to wing it, and you can do like that too. Sorry, I interrupted you. You can go
No,
ahead.
no, no. Yeah, there is an automatic removal of PMI when it reaches 78%.
Oh,
Like,
78%. That's
it's
right.
not 80%. Like, they give a 2% buffer. So if it reaches 80%, like you paid 20% during the time, they won't remove it automatically, but it has to reach like 22%.
And
Uh,
even after reaching that percentage, Venkat, I just wanted to add this point real
mhm.
quick. You have to call them. You have to push them. You have to
No,
call.
no, for the 78%, it should be automatic because of the rule says that. Yeah, like you said, yeah, like I never done that.
Right.
So I think,
I had to go through. It was real trouble for us to get to that point.
right.
Pushing them, but yeah, if you so keep a close tab, keep a close track on the 78% mark.
Mhm.
Basically 20%, 22%. Because in case if they don't do it, you can tell them, hey, it reached 22% or 78% on the other side. It's you better do it because according to the law, you have to do it.
Right, exactly, right. So the next one is a tax. Like, if you you're filing tax, right, you can use this as a schedule C. Like, you have a couple of rental properties, and then you put that under the schedule C with along with your 1040, and then whatever the tax you paid, interest you paid on the property tax and interest you paid on the property, right, that can be climbed. Like you are supposed to pay $20,000 to the tax, right, back, additional tax. Think about it, your individual tax, right? And then you basically have this real estate in there, and and then because of that, the $20,000 disappear, because you paid the interest on that, you paid property tax on the real estate, so it kind of equalizes it. So
Yeah.
you save like that money, $20,000 almost, right? And the last point I just wanted to cover, last point is the, if you buy, like we were talking about primary home or secondary home, like a rental home. If you buy a rental home, you have to pay 20-25% down payment. If you want to avoid that thing, if you want to pay only like 10%, you buy it as a primary home, you have to stay there for 1 year, and then you can come out of it, like get out, and then rent it out as a rental home. Nobody, like, it's 30 years locked in, right? That is kind of like a live and flips. That's another benefit, that people call it house hacking.
Yeah.
That's a big benefit. There are so many other benefits that I think we just wanted to cover this very short 10-minute video. Hopefully you guys got the overview of the real estate benefits in this video.
Thank you so much.
Thank you, guys.